Well, Jonathan Fenby is head of China research at Trusted Sources and joins us now to discuss all things China. Welcome to you, Jonathan. Premier Wen says China needs to break up a banking monopoly. Is major reform in the air once again?
There's a lot of talk of reform, certainly in China. I've just got back from a trip to China, both to Beijing and around in the countryside, and there's a lot of talk of change, the need to change. You have to put that in the political context to begin with. China doesn't have elections, but it has a lot of politics, and we're moving into a period where there will be a wholesale change of the leadership, starting at the Communist Party conference, probably in October, and then going through to the meeting of the legislature next year. We'll have new party leader, new government, new prime minister, and so on, and everybody's talking about what they should be doing. The problem is that everybody knows what should be done in China. We've known for years the kind of reforms that should be done, but the problem, as the new party leader, Xi Jinping, told cadres a little while ago, the problem is implementation, is getting things done.
And getting things done in any sort of quick time frame as well, notably in China.
Yeah, absolutely. I mean, for instance, on the whole question of reform of capital markets, so on, which is being talked about, the banks and everything else. One source, a very well-placed source we spoke to in Beijing, said, yes, we have a plan, there is a program, but it's a 15-year program and we're only in year one.
There's a real concern about the health of China's banks. I mean, we've had record profits from some of them over the past few weeks. How do you assess that health? Because bad loans, they're increasing. There's a real challenge of refinancing local government debt in particular.
Yes, indeed. I mean, the banks took on a lot of local government debt during the big stimulus package in 2009, 2010, and nobody knows how much, but a certain amount of that is certainly for projects which will never show a return on them. Not bridges to nowhere exactly, but not far off, big infrastructure. Now, how do the banks deal with those? These are not commercial banks. Although they've had IPOs, these are not ordinary commercial banks. These are policy banks, which do what the government tells them to.
Which means that they won't fail, presumably, right?
No question. The government will come in and bail them out. If the NPLs get too big, the government will simply set up another big bad bank and move the NPLs into that. Now, at the same time, these banks should be acting more commercially, but the government sets an interest rate which is uniform for the whole of China, has meant negative savings rates for households for the last few years, and the banks themselves their loan policies are not decided by the market, they're decided by somebody at the centre picking up the telephone and saying lend more money or lend less money. And what we've had this year is less lending. The central bank, the PBOC, which tightened policy last year to bring down inflation, is keeping its foot on the brake at the moment. So we haven't had the expected easing.
Now, we heard yesterday that China's tripled the amount foreigners can invest in various markets, in some limited markets. Do you envisage more opportunity for international investors over the next few years, under the next new regime?
Yes, I mean, certainly there's been a lot of foreign investment in China, and of course a lot of China's exports are actually produced by factories which foreigners have invested in. That investment, what China wants is investment which will go into higher tech and more advanced machinery and production. It wants to move away from the 1980s model of cheap capital, cheap labour and benign external markets, and it wants to do more of its own thing and move up the value chain. And
does this lead nicely to the internationalisation of the yuan?
That's a very long-term, I mean, that's happening on the edges through Hong Kong, but that's a long-term project again, and is partly being pushed, we discovered this when we were in Beijing, because of its knock-on effect on the domestic market and the way that it will push towards liberalisation of the domestic capital markets.
No, as you mentioned at the beginning, we've got a change in the top, and actually all through government, throughout the country really, regional government again, it's filtering through, but a change at the top over the next few months. Is that transition being held pretty smoothly, or behind the scenes is it really quite bloody?
Well, there's been a great upset, a great drama with a man called Bo Xilai, who was the rock star of Chinese politics, who was doing his own thing in this mega municipality of Chongqing, 32 million people in Western China. I was there a few weeks ago, just actually as he was being sacked. And he's really been got rid of, I think, not for policy reasons or deep political reasons, but he was just getting too big for his boots, and the other leaders didn't want him around.
So when we're looking here at China from the West, and we're looking in, there's a lot of concerns in the markets, slow down, and real concerns about growth in China. Is it enough concern in Beijing to have any sort of major monetary easing policies now, or do you think it is just going to be the few little bits of
the monetary easing will be slow. We've had one reserve requirement cut this year. There'll probably be another one, but it's still pretty slow because remember the outgoing government, Wen Jiabao, the Prime Minister, he has actually said he wants to bring growth down to 7%. That is government policy. Now the question is, can they arrange that in an orderly manner, or will we get a big plunge which will take us towards a hard landing? We don't think so. At trusted sources, we've always thought of a soft landing, and that's still my bet.
And that China's trade balance, that February deficit, a bit of a blip?
Well, it's partly because of Chinese New Year, and you can't wait till the second quarter to see how things are going.
Jonathan Fenby, Head of China Research at Trusted Sources. Always great to talk to you. Thanks very much indeed for your time.